Hey guys, so I want to take a look at graph. The ticker for this is GRT, and I'm currently on the weekly time frame. Now I have some of this token. I put it on my ledger about maybe 2 years ago, and until today I had never looked at the chart. So basically, if you're trading this token, I've marked out kind of significant levels that you may want to mark on your chart as well. So let's start with the horizontal lines. These are just basically levels of support and resistance that the price has kind of bounced off before, right? So the first level I would recommend drawing is right here at around 0.0705. As you see, when the price came up, we kind of got rejected off of it, and then we broke up. So this isn't like a major level, but if this next level breaks, then you could look to this level here for a support. So the next level that I was just referring to is I have it drawn at 0.0910. And then above there, we have 0.1717. And as you can see, just, to kind of explain it, the price came down here. All the candle bodies were closing above it, came down again. This level of support held for quite a while. On the way up, we got resisted, slammed down, resistance again right here. And then as we came back down to it, it was support. So this level is serving as both support and resistance, just depending on where the price is relative to it. Okay, the next level up, as I mentioned, is around 17 cents. And you can see the price reacting off this level as well. So, you came down, it was resistance right here, came up, resistance right here. The candle bodies closed below it. Basically for quite a while, for about 2 months, the candle bodies were kind of closing below this level. And ultimately we came back down to the next level. So yeah, these are the levels for this lower range. Up, if we continue up top here, we have a level drawn at 0.3873. And as you can see, the price is reacting to this level as well. You see we came down, served as a level of support. When we broke below it, it was resistance for a bit. And right here, as you can see, the price tried to get above, but it was a level of resistance. So that I would draw. And this one right here, I have it at 0.5292. So quite a ways up from where we are right now. I mean, getting back up there would be a pretty good gain if you were buying down here, accumulation range. And the next level, horizontal level, I have at $1.16. And as you can see, the price is responding a lot to this level as well. So, we dumped down. It held a support here for maybe about 3 or 4 months. Came up to this level, was resistance, came down here, support again. When we broke below it, it retested the previous support as resistance. It held. So obviously, if the price comes back here, it's going to get a lot of trouble as well. Okay, so, I mean, I know that's a lot of lines, but this is just how I trade. Okay, the other lines I would suggest that you draw if you want to trade graph, these down-sloping levels of resistance. So you see here, we had 2 of them. So right here we had 1, 2, 3 touches to it, and we just finally broke out of it. So I would still draw this on because this now should serve as a level of support. And then the other downsloping level of resistance I would recommend drawing is this one right here. So we have 1, 2, 3, 4, 5 touches on it right now, or even more. And this is the current level of resistance. So obviously, if this level breaks, the next level I would expect would be this horizontal line that I drew at around 17 cents. So from here, that would be a pretty good move, especially if you used a little bit of leverage. Okay, so yeah, these are the levels I recommend drawing on the chart. Basically, right now, the price is within a very tight range here. So you have, this level of support here, the horizontal line, around 9 cents. This downsloping level of resistance, and the price is just kind of ranging within here. If this level drops, I expect the price to come down here. Okay, so another thing I like to do to find potential targets to the upside is I take a Fibonacci, and what I want to do now that I've marked these levels based on the price action is I want to look for confluence with the Fibonacci. That'll really tell me what levels are most likely to serve as the stronger support. So I take the fib from the top down to the bottom, and that will give me these projections, and I can already see that the price has reacted to the first Fibonacci retracement level. So this 23.6, I really don't pay much attention to it. Most of the time, the price will just cut right through it. The first level of significance for me is this 38.2, and you see that's basically where we wicked up to. So the price came up, and there was a lot of selling pressure right around here, people just waiting to short. And yeah, that's why you see this long wick rejection. So, obviously if the price makes it back up here, that would be an area of resistance, and that's around 0.236, right? So, but keep in mind that the first level of resistance you're going to contend with is right here. And consider this a range, okay? This is a range between where the candle bodies close and the wicks extend to. Because right now I'm on the weekly time frame. So if I move this down to the daily time frame or the 4-hour, you're going to see the price cut through here. But what I'm really looking at here to trigger longs is a daily candle to close above here. And then the next level for me would be this level, this 38.2. And if that breaks, then the next level for me is going to be this 50% retracement. And as you can see, okay, it's covered up right now. I actually drew this level. I'll draw it down a bit. See right here? This is the price that we drew just based on the price action, but the 50% Fibonacci lines up perfectly with that level. So we have the 38.2, which already rejected the price. So we know that's valid. And this 50% lines up, it literally covers the horizontal support resistance line that we drew. So again, that's around, 38, 39 cents. So a very significant level right here. The price has responded to this level and we have confluence with the 50%. Okay, the next level up from there, it's going to be this line that we drew. Obviously, like this does not really match up with the fib. This is just the horizontal line, so be aware of that. But it's very possible that if the price comes up here, maybe the wick is going to extend into this golden pocket range, right? The wick, and then maybe the body might close below here. So consider this as a range as well, right? And then beyond that, you'll see the 786. Again, it almost covers up the horizontal line that we drew. So we're seeing a lot of confluence with this Fibonacci retracement along with the lines that we drew. Okay, so I'm going to get rid of that. And I want to just talk about the basic price action here. So as you can see, when we had the downtrend here, we'd have like an impulse move to the downside, and then we just have like a corrective phase to the upside, right? Impulse down, corrective up. Impulse down, but now look what's happening. Now we have an impulse up, and in process of this strong move to the upside, this is a new high relative to here, and now this is a corrective move down. So this indicates to me a shift in the trend, right? And this is a weekly time frame as well. So when I see this happening and I see a new impulse to the upside, I will take a Fibonacci retracement and I will see if this pullback is at a important Fibonacci retracement level. So bottom to the top now, and boom, look where we came down to, the golden pocket. So this is a pretty good sign. I mean, I think the price, if Bitcoin dumps, the price could come back down here, and then obviously it can come back down here to the 786. But so far, it's looking good. The fact that we had the impulse move up, new high, and then we had this reaction off the golden pocket is a good sign. So for me to start trading this on a long term, like on a weekly or daily time frame, I need this to break. Like I'm not even going to bother unless this downsloping level of resistance breaks. The price breaks this downsloping level of resistance. Then I will consider taking longs to the upside for trading purposes. On a higher time frame. Of course, I have some of these coins on my ledger, but I'm not even going to think to sell those until maybe 2024, 2025. But yeah, for my trading balance for a weekly or daily swing trades, I'm not going to enter until this breaks, right? But so far it looks pretty good. Now, if I was to take a short-term trade on this, let's switch the chart here and let's take a look at the hour time frame. So here, this is just the hourly. The price is in this formation, so we have a downsloping level of resistance along with this level of support to the bottom. We have 1, 2, 3 touches on the support, and we have 1, 2, 3, 4, many touches on this resistance. And this is based on the candle body here. So you see we're on the hourly, and I just marked it where the candle bodies close. So if I was to see the price come up and the body of the candle to close above this downsloping resistance, which actually, we have that. That's a good sign. And then, okay, so here, if the price came up here, I would consider entering a short position. And I would only short it down to this midline. I wouldn't try to target all the way down here. See this midline that I drew? This is also acting as a level of resistance here, support, resistance. So this for me is in place. So theoretically, let's say the price came back up to my little box here. I could take a short position, and let's say I entered right here. I placed my stop loss above this previous high, and I would target down to this midline here. I'd probably front run it a bit, so something like that. So yeah, if the price makes it back up here, I enter a short pending some sort of bearish candle formation, place my stop loss above the box and above this this previous high here, and I would target here, and that would give me a risk reward ratio of 1 to 4.38, which is very good. I would risk 0.70%, so less than 1%, to potentially get 3% if the trade plays out in my favor. So yeah, that's something I would look to. Another potential option I would on the long side would be, here kind of presents a long opportunity, but I'm not going to take it. If the price came back down to the previous downsloping level of resistance here, then I would consider maybe entering a long. And the first level of resistance on a long is going to be here, this midpoint line, and then beyond that would be obviously up to this box. See right now, just watch the price action. We're at the line right now. So well, these are hourly candles. We're not going to sit here and watch it for an hour, but be interesting to see how this plays out. Now, okay, if for example the next candle gets put in and it's like a doji, and then a green kind of bullish engulfing candle to the upside, then that gives the opportunity to enter a long. So in that instance, I would potentially enter a long. Let's theoretically say it was right here. I would place the stop loss below my little midpoint line here, and I would target the start of the box. So that would give me great risk reward ratio of 1 to 5.4. I would risk 0.45% to potentially get 2.43% to the upside. And of course, that could be amplified with leverage, but I would not enter that position until I see some sort of candle confirmation here. So what I want to see is a doji after this one closes, like maybe if this wicks off, a doji, and then a bullish engulfing candle, some sort of bullish candle, that I can just place my stop loss below that bullish candle when it forms, if that makes sense. But anyway, yeah, so this is just basically shorter term time frame trades, potential trade setups for graph, and I already showed you the long term, the structure on the long term. So long term, I would not enter long positions until this resistance level broke, and if it does, then you have your targets marked here to the upside. And if you want confluence and know which one of these levels is the most significant, take your Fibonacci, run it from the top down to the bottom, and just look for confluence there. Anyway, I hope that helps. If you're not subscribed and you want to be able to get these updates in the future, I'm going to do about 2 or 3 analysis videos every single day. Just subscribe now, and then when you do that, you're going to see a bell. You have to click the bell and then click on all, and that way you'll actually get notified when I release new videos. Okay, that about wraps it up. Take care. Have a good evening, guys. Bye.